Government Shutdown 2025 and what it means for housing market. If you are in the middle of buying a house, refinancing, or waiting to close, this shutdown could really hit closer to home than you really think. But before you panic, let's break it down and see what really is happening, who is affected, and how you can stay protected in this uncertain moment. Hey everyone, this is Kashif Rasul with Samson Properties, your local Northern Virginia Realtor, helping families buy smart, sell smart, and build wealth with confidence. Today, I am unpacking how the 2025 government shutdown impacts homebuyers, homeowners, and mortgage rates, especially in the DC metro area where a large number of families rely on federal income. Here's the summary. The federal government officially shut down, and that's causing ripple effects across the housing market. Fannie Mae and Freddie Mac are still running. Good news for most homebuyers. But FHA, VA, and USDA loan programs are facing slowdowns and temporary pauses. Fannie Mae and Freddie Mac do not depend on congressional funding, so they stay open. They have introduced temporary relief policies to help affected buyers and homeowners. That includes flexible income verification, forbearance options, and alternate documentations if IRS or Social Security systems are down. However, if the shutdown drags into November, buyers might need to show more funds or reserves, meaning extra cash in saving to qualify. For our local Northern Virginia market, where thousands of people work for or with the government, that flexibility could keep many deals alive. Here is where things slow down. FHA loans. Still being endorsed, but reverse mortgage and home improvement programs are passed. Condo approvals are on hold. VA loans. The good news is that VA-backed home loans continue. Benefits for veterans remain active. USDA loans. Completely paused, no new direct or guaranteed loans until the government reopens. For first-time buyers or rural buyers in Virginia, that means delays, not denials, just waiting longer to close. Flood insurance pause. One hidden risk during a shutdown is flood insurance. The National Flood Insurance Program cannot issue or renew policies right now. That is a big deal because lenders cannot close on a home in a flood zone without active coverage. If your NFIP policy expired, you might be stuck until Congress reauthorizes it. Nationwide, the NAR says about 1,300 sales a day could be delayed. So, talk to your lender and insurance agent early. Private flood coverage may be available for help, but not every lender accepts it. Economy and mortgage rates. When the government shuts down, it also shuts down the data, job reports, inflation numbers, and you name it. That leaves the Federal Reserve flying blind. Right now, 30-year mortgage rates are averaging around 6.3% roughly. But if the shutdown continues and investors are losing confidence, Treasury yields could rise, and with them, mortgage rates. Think of it like turbulence. The plane is still flying, but the instruments guiding it are dark. So what should you do right now? For buyers, stay in close contact with your lender, confirm if your loan type is affected, keep your documents updated. For sellers, be patient. Some delays are out of your buyer's control. Flexibility helps keep deals alive. For homeowners, if you are furloughed or missing paychecks, contact your local servicer immediately. Many are offering temporary forbearance. And above all, keep your credit steady and track every communication in writing. The housing market does not stop, it adapts. Information, preparation, and the right guidance make all the difference. If you are buying, selling, or refinancing in Fairfax, Loudoun, or Prince William County, feel free to reach out. I will walk you through every step and make sure your move stays on track, even during this uncertainty. I'm Kashif Rasul, helping Northern Virginia families move smart, sell smart, and build wealth with confidence. Stay informed, stay calm. I will see you in the next video. Thank you so much for watching.